Hope everybody's having a great summer. Speaking of summer, one staple of this time of the year is the ocean, the beach. A lot of folks taking vacations this time of year. And I want to talk a little bit about the concept of the beach flag. So for those of you that are not familiar, lifeguards use flags because the ocean doesn't always announce what its intentions are. The flag is a codified way for folks to take a read of the real conditions before entering the water. And it works because it's been right over the years and it's prevented a lot of mistakes and unfortunate tragedies. This summer in the resin market, there has been some very readable flags that have been flying. Polyethylene specifically, it came down when the data said that it would. Polypropylene continues to stay buyer favorable despite noise in polymer grade propylene. PVC continues to be soft through seasonal construction season. The flags that earn the trust, that's because they were right. Those were the green flags. This week, some of the flags are starting to turn and not all of them are green. Quick preview. We've got green flags for polyethylene, polypropylene, PVC, and PET. Things are starting to turn yellow in polystyrene, ABS, polycarbonate, nylon 6, and nylon 6,6. And the reason for that yellow turn is the same. Let me walk you through exactly what the market's saying and what I would be doing if I were sitting in your seat as the buyer. I am Michael Workman, and this is Resin Market Moves. I want to start with crude oil. We did see WTI surge to over $92 a barrel and Brent crossing the $100 per barrel mark for the first time in many months, driven by the escalating conflict in Iran and the wider Middle East and serious threats to global energy and shipping lanes. And it's not a routine feedstock move here. $13 a barrel, actually more than that in a single week is very significant. We did see the second named storm of the season last week, Tropical Storm Bertha, which tracked towards Texas and the Louisiana Gulf Coast. Of course, that's where a significant portion of the country's petrochemical feedstock assets are located. There haven't been any disruptions noted. We have boots on the ground in the Houston area, and commentary was around lawn chairs being blown over, being about the extent of the damage, but there could be some flooding and logistics issues. And that's really, a preview of what's to come. It's just the second storm of the season. What we're really looking at this week has been the spot benzene market. It's been firming throughout the month of July, sitting just under $5 a gallon this week. In good news, the July benzene contract has already settled, so it's not going to meaningfully affect July pricing, but the August contract numbers which are being determined right now are really at risk. The important thing to keep in mind is that the math for July hasn't changed, but the August picture has gotten a lot more complicated. And that's an important distinction. And we're going to dive into it a little bit more detail for each market. Let's talk about the green flags first. So polyethylene, July contracts are expected to come down by at least 10 cents a pound, which follows the June 15-cent drop. Supply continues to be very ample with inventories elevated and demand not recovering in a meaningful way. There have been attempts by at least one producer for August price action of 5 cents a pound. That's a flag watcher telling you that the supplier really wants to turn that flag from green to yellow, but the fundamentals, supply picture, demand story, position of inventory don't support it. Right now, that's noise, not a signal. The data hasn't changed in polyethylene. Negotiate July hard, get ahead of anything that could be coming around the corner in August. Polypropylene, we saw PGP ease 44 cents this week, which was elevated over prior weeks, but edging lower. Despite that cost pressure, producers haven't announced any July price increase initiatives. And the silence is really a demand signal. When producers have a reason to raise prices and choose not to, the market is giving you a big indication as to why. Now, Heartland's polypropylene facility up in Canada has resumed operations after an extended outage, with supply coming out of there returning to normal. There is a refinery turnaround happening with Phillips 66, which is something to watch on the supply side. So continue to use that and complete your July negotiations. PVC is the quietest market this week. The waters are very calm here. Supply exceeding demand, no July initiatives. Builder confidence registered at a 15th consecutive month below 40 at a 34 in July, which is the longest stretch of time that its confidence has been below that number since 2012. We did see housing starts rebound up to just under 1.5 million units, which is up almost 20%. And that's really driven by a recovery in multifamily homes, not single family construction, which is really what we look at to change the fundamental picture. The buyer continues to have the leverage here. It's yours. So continue to push. In PET, the last green flag we have, Poly's July paraxylene contract settled down 2 cents, with PET pricing surely to follow. Seasonal bottle demand has been somewhat mild during what should have been a very peak consumption season, especially with the World Cup here in North America. It supports order activity, but not reversing the price direction. August price initiatives have not been announced yet. Now, with Bertha and the continued risk, Gulf Coast weather and crude oil volatility, we still need to keep our eyes on PET as the hurricane season is most active here in August through October. And those assets domestically are concentrated in the Gulf Coast. So negotiate your open volume now and think through the Q3 coverage for weather. Now we get to the 5 markets where the flag just turned yellow. I want to be precise about what yellow means and what it doesn't. So yellow doesn't mean that July is bad. July is still favorable in all of these markets for the last few days of the month. Yellow means the August picture has changed this week, and the buyers who are going to complete their July negotiations are going to be in a different seat than the ones that have to point to a benzene spot chart here in a couple months. Let's start in polystyrene. July is expected to come down at least 6 cents a pound, with the July benzene contract already settled. It's locked in. Benzene spot has been coming back up though. So again, we need to keep our eye out for what's going to happen in August. So close your polystyrene pricing this week. Don't let this become an August opening argument. ABS fundamentals continue to be balanced. Material is available, both domestic and imports, and there aren't July pricing initiatives that have been in the market. July feedstock settlements have moved lower and are working through the ABS supply chain, and it's a good direction for most buyers. But the same benzene exposure exists with the same August risks. We did see U.S. retail sales bounce back in June, which modest demand encouragement in some ABS markets, but broader manufacturing conditions haven't materially tightened fundamentals here. So capture what's available for July concessions and then, act before anything comes additionally in August. Polycarbonate, flag yellow, similar story, stable conditions right now. Supply is comfortable, but with benzene firming up, we have to think about polycarbonate changing again. That was really the only feedstock that changed. Most of the others affecting polycarbonate, like propylene, held flat, and it's just pricing anxiety right now in the market, not supply math for peace. Now in Europe, we're expected to see lower prices for polycarbonate in July. In China, continues to be under downward pricing pressure there because of seasonal slowdowns. It's important to keep in mind the global context here. So if you need polycarbonate, you need to move in July. The feedstock data that has settled tells a different story than what's currently going on in the spot market. In nylon 6,6, again, balanced. Benzene's up. European supply is healthy. China, nylon 6,6 demand is not expected to pick up again this month. The risk is the same benzene to August pathway as the other resins. Challenge any of the rollover pricing from July feedstock. You should get some relief there. The cost case for maintaining June pricing just doesn't hold. And in polyamide 6 or nylon 6, which we look at a different feedstock there, caprolactam. We saw caprolactam drop sharply last week. A significant move direction reflects July benzene contracts coming down again. But with benzene firming back up, this might be a short story. European supply is healthy in nylon 6. Asia demand is soft. While we did see caprolactam move quite a bit, that number is your argument right now. So don't accept any June rollovers. Contest the feedstock math. Caprolactam is the call out. So let's pull this all together as we move into the month of August here at the end of next week. It's uncertain in a way that July wasn't. And there's going to be 3 variables that determine how flags will read here at the end of August. Benzene spot trajectory being the first. Does the current firming hold with the conflict escalating, or does it come back off with the conflict de-escalating? If yes, those 5 markets are set to absorb some higher costs. Number 2, we continue to watch the weather. It looks like Tropical Storm Bertha is not going to be an issue for the Gulf Coast and the resin market. We do see hurricane season typically the most active here in August, though, and then through October. So we need to keep our eyes there, especially as it relates to PET and those Gulf Coast petrochemical assets. And then the third one is crude oil direction. WTI again above 92, Brent creeping above 100. Does it hold? The Middle East situation is going to continue to be the driver here. Let's hope we get to see some stability and those costs coming back down for a lot of reasons. The polyethylene August initiative is going to be tested by the fundamentals. We continue to track whether supply demand conditions are going to shift in order to give that any additional traction. But the flags have been right all summer here, so it doesn't mean they're going to stay the same color forever. August is going to ask some real questions. Your job as the buyer is to get your July negotiations done before August answers the bell here. So in closing, I want to wrap up with a few things. Again, these flags, the ones that ResinSmart have been putting out there, have been earning some trust this summer. It's important that you act on what they're reading in the green markets, negotiate hard, extract your concessions, and dip your toe in the water and swim while the sun is still out here and the waters are calm. In the yellow markets, complete your July pricing before August arrives. It's the July contract data is really in your favor. ResinSmart tracks all of this week to week so that you're not piecing it together from multiple sources. If you want to follow along with us, check out our newsletter in the comments. And if you're interested in how you stack up against the market, sign up for our benchmark assessment today. Until next week, good luck out there, travel safe, and purchase wisely.